Well, now, on the rain question, coming from Ireland, that's a difficult one. Although we've had the driest November for a long time, so things are changing and uncertainties reign literally everywhere. So very good morning. Nice to be with you. It's always nice when you're outgoing to still be asked to speak, because you usually think she's gone, let's hear from the next. So I appreciate that, but also to stress that there is always continuity at the Commission level. And while the Commissioner is there to do a job, we ensure that there is a continuity, a carryover, even though the mandate of the next Commission very much speaks, Mark, to your opening remarks around competitiveness. And I think it's front and center of all our thoughts, because it's really the answer to a lot of the problems, the sometimes stagnation that Europe feels today. But my opening remark, which is not in the script, is to say we have the capacity to change, and to change in a good way, and to address the concerns around competitiveness. So I'm very happy to be here this morning with the association to kickstart your conference. And as I said, the whole theme of my remarks will be around of what we've done and what is likely to come in the near future when we have the Commission installed. And on that, I reckon that at some point, I'm being delayed at the departure gate. We were meant to board earlier, but we hope to be boarding for exit when the Parliament votes next Wednesday on the incoming Commission. And that is, I think, all our hope and our expectation. You refer to post-trade as part of the iceberg that lies beneath the surface, which is a very striking image. And I suppose it is a very apt one for the role of CSDs. And it's something that I've come to appreciate over my time in the Commission as Commissioner for Financial Services. So if you look to what we can gain from efficiencies in post-trade, this can be a major contribution to maintaining investor confidence and facilitating the flow of capital. The words in the speech were across borders, but I delete that, because we should be talking about the flow of capital in the internal market. And I think we need to start talking about that more than across border, because that's an impediment to the way we think. And it's something that I have spoken about since my arrival into this role. We have a single market in Europe for 31 years, but we don't have a single market when it comes to capital, which is an untapped potential that I hope will be unleashed in the coming years. I think at this stage we're all very aware of the need to boost European capital markets and, of course, competitiveness, as I've mentioned already, and to gain any efficiencies that we can in the system. And your sector is identified as a priority. So the timing is good for this conference, because it will allow us to share ideas and a vision for those next steps in European capital markets. And as you know, the new words are European Savings and Investment Union. So I'm interested to hear your vision in this. My colleague, my incoming Commissioner designate, Albuquerque, she's already preparing her team and her tasks ahead. So I want to take stock and, as I said, maybe look at, from my experience, what does lie ahead. So specific areas that we can take some pride in having made grounds over this mandate, it's no harm to reflect on that. I sometimes think Europe does gloom very well, and we neglect to say what strengths we have as a European Union. So expanding and deepening the Capital Markets Union has been one of the top priorities of my mandate. And just to give you a summary, we have delivered on all the priorities that were laid out in the 2020 Capital Markets Union Action Plan. And we've removed significant blockages to the Capital Markets Union. For example, our new regulation on consolidated tape. This will give us a single view of EU trading and will drive consolidation and ensure efficiencies in trading. Also, the European Single Access Point, this online portal for company financial and sustainability information. And this will give us more transparency and better access to information. We've made great progress on our rules on European long-term investment funds, which will help the financing of long-term infrastructure projects. and SMEs while providing increased opportunities for retail participation, and that's a topic that needs attention. If I look to tax, through our FASTER initiative, we aim to make withholding tax procedures in the EU safer and more efficient for investors in the single market, national tax authorities and financial intermediaries like banks or investment platforms. On clearing, our review of EMIR 3, sets out important elements to make the EU clearing system more competitive and more resilient. It also contains the active account requirement to support and to decrease, the EU's open strategic autonomy agenda and to decrease our over-reliance on third country systemic CCPs. Now, personally, I would have liked more ambition on central clearing, but EMIR 3.0 is definitely a step in the right direction. So I take progress, even though I think we need to do more. Another strategic priority for the Commission under the CMU Action Plan was improving the rules around the settlement of security transactions, and the words are cross-border. And that's why in this mandate we have modernised the rules applying to central securities depositories to better integrate EU capital markets and enhance their competitiveness. CSDs are critical infrastructures for the proper functioning of a single EU capital market. They ensure that transactions executed on EU stock exchanges are settled correctly and in due time. 26 CSDs are authorised in the EU, and some of them are amongst the largest CSDs in the world. I also want to highlight the vital role that CSDs play in supporting and implementing EU sanctions. And here I'd like to give particular mention to Euroclear Bank, who have been instrumental in our critical work on sanctions in recent years. Overall, transactions settled by EU CSDs increased steadily since the launch of the CMU in 2015 and have reached an amount exceeding 1,500 trillion euros in 2023. When we were consulting earlier in this mandate around CSDs, that consultation showed that we didn't actually need to make significant changes to the rules, but rather that improvements could be made through targeted changes. And these targeted changes, which came through our so-called CSDO refit, entered into force at the beginning of this year. The changes aimed to support CSDs in the EU in a number of ways. So firstly, by streamlining procedures, removing burdensome passporting requirements, and enabling CSDs to operate across the EU more easily. For instance, the new rules remove duplicative and costly procedures between home and host supervisors and significantly reduce the maximum time for granting the relevant authorization. Secondly, cooperation between supervisors will improve by establishing supervisory colleges for certain substantially important CSDs. And these supervisory colleges will allow for more consistency and convergence in the supervision of CSDs. And thirdly, the new rules adjust the conditions under which CSDs can access banking-type services, not only for designated credit institutions, but now also for other CSDs authorised to provide these services. This gives CSDs access to a wider selection of settlement currencies and introduces greater competition for the provision of these services, while at the same time ensuring financial stability. And last but not least, the new rules introduce more proportionality in the settlement discipline regime. Under this mandate, we also looked at how new technologies, like distributed ledger technology or DLT, can improve issuance, trading and settlement of securities. The DLT pilot regulation now allows CSDs and market operators to use DLT-based systems if they follow the pilot's rules and safeguards. This framework gives the Commission, national supervisors and market participants a chance to gain more experience with DLT for issuing, trading and settling securities. Although the pilot's rollout is gradual, the first authorization was granted in October, and multiple applications are currently under review by national supervisors and by the European Securities and Markets Authority. So, as you can see, a lot has been achieved. And then there's the however. With rising geopolitical risks and intensifying economic competition, we have to strengthen our focus in the next mandate to drive real progress in European capital markets and to ensure we remain competitive globally in attracting capital. And you know now, for the President of the Commission, Ursula von der Leyen, competitiveness is central to her vision for the next mandate. In fact, it's a theme woven into each Commissioner designate's portfolio. And the focus on competitiveness also took centre stage in the major economic reports published this year, so the Enrico Letta report and Mario Draghi's report, with very clear message. The European economy must evolve to remain a relevant global player. This evolution is achievable, though stronger European capital markets are a prerequisite. Both the European Central Bank and ESMA have recently underscored this point. And the political momentum is with us on Capital Markets Union. EU leaders in the European Council and EU finance ministers in the Eurogroup have given their strong backing. Deeper capital markets will allow us to finance our shared priorities, which is the digital and the sustainable or the green transition, but also to ensure our long-term competitiveness. As Mario Draghi put it, acting decisively now and acting together will allow us to prevent our economy from falling into a state of slow agony. Now, agony at the best of times is not pleasant, but slow agony is a fate worse than death in many ways. So we need to see much more ambition to mobilise more private capital, improve the scale of our capital markets, and ensure that we have the right sources of finance in place to achieve our shared goals. Now, this is probably the part of the speech you want to hear, where I'm looking ahead. And here I see two clear areas needing attention. So the first one is that we need to support citizens in building their household wealth, supporting their economic prosperity, and more generally in saving for the future, particularly for retirement. And trust me, it comes sooner than you think, at least the age. I'm not sure about the retirement piece. You can ask me that question if you wish. We have record saving rates in Europe. And that really shows there's this vast untapped potential to channel savings into financing EU investments through our capital markets. Second, the scale of industrial transformation that is needed in the coming decades requires a more diverse financial system that includes both capital markets and banking. And this is the entire sense of the Savings and Investment Union. Strong, globally competitive banks and investment firms are essential to offer Europeans better and more affordable financial products and services. In many cases, the essential building blocks of a successful savings and investment union are already in place. And again, my Commissioner-designate, Albuquerque, has been tasked by the President to advance this project by building on the existing foundations. Our securitization market is considerably smaller than that of the US, and that suggests Europe's financing opportunities are not fully exploited. Now we need to address both regulatory and non-regulatory barriers that are holding this market back. Elsewhere, and in addition to the retail investment strategy, which, and I will repeat when I have a forum, was unfortunately watered down by the co-legislators, we need to look at how to mobilise private savings and to put them to competitive use. And here, EU citizens need to get access to simple and affordable investment products. To unlock that retail participation, we also must explore ways to strengthen the role of occupational and private pensions in citizens' savings plans and make capital markets more attractive to the retail investor. On supervision, there is a need for further convergence. And in this context, we can think about areas where more EU-level supervision would make sense. Although I am all, and I think in the room we're all well aware that this would not be easy. But frankly, we know that none of this is easy, but it is necessary. And here I count on EU leaders and finance ministers to match their well-voiced support for the Savings and Investment Union with the necessary action to deliver on it, because quite frankly, words are not enough, and we have had many words and fine speeches urging us to act, and the time is now. Some areas of my successor's work will be of particular relevance for CSDs. Post-trade infrastructures are an integral part of the investment value chain. The current fragmentation of the market is holding the sector back. And that's why the Commission committed to launch a study to identify barriers and ways to support consolidation of stock exchanges and post-trade infrastructures. And of course, all of you here today are well aware of the challenges. Nevertheless, the nature of some of the identified barriers has changed since the days of the European Post-Trade Forum or the Giovannini reports. It's also important to mention that not all barriers are related to legislation. Some are down to economic, political, or behavioural factors. We also heard about new barriers and bottlenecks during the September roundtable on EU capital market consolidation, which concluded that changes needed to improve the efficiency of EU post-trade markets. The results of our study will provide new insights to set the policy direction. Another topic that will impact the future of European capital markets is the very current question of the shortening of the settlement cycle to T+1. With the North American move to T+1, 60% of global markets are now settled within one business day after trade date. It's expected that by 2028, this number will climb to 70%. At EU level, we have anticipated the trend and requested ESMA draft a report analysing both the costs and benefits of moving to T+1 in the EU. And as you know, ESMA's report was officially published yesterday, recommends the EU moves to T+1 by the 11th of October 2027, with a legislative change proposed for the CSDR. ESMA's analysis shows the benefits of moving to T+1 outweigh the short-term adaptation costs. Shorter settlement will contribute to less risks, remove inefficiencies stemming from the misalignment with global markets, and will allow for mid-term to long-term cost savings. Of course, the decision to politically endorse the recommendation of ESMA's report or to propose a change to CSDR is ultimately for the next Commission to take. So in conclusion, there is critical work awaiting my successor when the College of Commissioners is confirmed. I want to wish publicly my successor, Commissioner-designate Albuquerque, every success in her role. She is a very strong and will be a strong commissioner, and the portfolio will be in safe and strong hands. But to make real progress, some of this work must also happen beyond the Commissioner's office at the national level so we can move forward. And I really cannot emphasize this point enough. Succeeding with the Savings and Investment Union means overcoming political obstacles that have long hindered the creation of a truly unified EU capital market. And this will require courage, political commitment, and a readiness to make tough decisions. And I would warn that if we continue to speak fine words but sit on our hands and do nothing to action these words, the Commission will action the words, but it is then up to others to take up the challenge. We're going to be caught out. We will, if that happens, we will fail EU citizens. We will fail EU businesses. We will fail EU startups. And Europe will be the weaker at a time when we need to be much stronger and perhaps much bolder. Though in my over 20 years working in the European institutions, I first got elected to Parliament in 2004, Europe sometimes does its best when it absolutely has to. And I think we're now at that stage. So thank you for the invitation, and just rest assured, I will be watching very closely what the next 5 years brings forward, and we really do need progress. Thank you.